know the EU is moving forward as fast as they can with CBDCs. US is kind of, hey, we want stablecoins and not CBDCs, at least at the moment. How is the UK looking at like CBDCs?
Well, the UK is, as you would expect, looking like an idiot. That seems to be the main thing that we excel on at the moment. So unlike the EU, they're beginning to realize that they're not going to be able to create a CBDC properly. So my latest posts on this were in response to some intel from the governor of the Bank of England and his team. The governor still, he says openly, he doesn't see the use case for a CBDC. And while the Bank of England is still in consultation, they don't seem very keen on it. Secondly, it doesn't seem to be that anyone within the team knows or understands how they would make it work. And they know there's huge public opposition to it in the UK. It's a really, really unpopular policy. On top of that, it's not something that the Labour Party ever mentioned in their manifesto when they were coming to government. So it's nothing they promised to do when they came to power. So I think it's very unlikely we'd see legislation to create one before 2029. And hopefully that will be the point at which a government who is violently opposed to the idea of CBDCs would come in. So, and then on stablecoins, honestly, the UK doesn't know what it's doing. There's been various stablecoin consultations over the years. I think I took part in my first one maybe in 2021, possibly 22. So we've got two problems there. Firstly, they don't know how to create a stablecoin, and we don't have a sensible tech firm in the UK that could currently do that. And secondly, no one wants the British pound anyway, as can be seen from the markets today. It's been the worst day for the pound in 4 or 5 years, I think.
This is my biggest hope for CBDCs, that governments will take ages to actually implement anything, and it will be so bad implemented as most government software that's why I also think that CBDCs is probably with stablecoins the best way, because this is already working. Like those software rails are already working. You just have to capture the people working there and nationalize it. But developing a whole new central bank digital currency, whole new digital euro, pound, US dollar, that's a whole new game. Like you really have to develop something there and bring it to the market and make it good for the people, because like it will be hacked and all of that. So this is a hard part where I just hope it takes forever. So Bitcoin can take over before they even do anything.
I think I'm completely on the same page with you there. It's ironic. I think one of the best defenses against governmental tyranny is that the people in government are idiots. So we just got to rely on their continual idiocy and not on our own efforts, it seems. But
we have to print that.
No government IT project has ever worked. And we've got examples of other CBDCs in the world already. The Sands dollar in the Caribbean, which was used in Bahamas from memory, that went offline for about 3 months. How can you have a money that just stops working for like 90 days at a time? It's just idiotic.
Yeah, there was the e-naira also that was completely failed, I believe. I think e-naira was it. So we have many examples that failed with it. I think it's just something to be aware of. I'm curious on how fast the EU is doing something and what they come up with, and how they incentivize people to use it, because the whole game theory around is interesting, and they could make very, very simple incentives and people are flocking in. I always remember, I don't even know how it's called anymore. You remember this iMeme coin, where people could scan their eyes and then they get some coin. Yeah, WorldCoin, yeah. And I mean, it's not a meme coin. I think that's wrong to say. But people were standing in line to scan their iris. And I was like, this is all it takes for people to adopt something? Like they're just flocking in there. So yeah, it will be interesting to see how they come up with something that is good. And yeah, but it's a good thing that countries and governments aren't as as good in developing this software. But it also seems that at the same time they are not developing a lot for CBDCs. They're doing even less good for Bitcoin in the UK. It seems.
Unfortunately, yeah. So I mentioned just before we started chatting, a lot of our work at BPUK this year has been politics focused. So we did a lot of research last year. This year we're doing a lot more outreach. So one of our volunteers has been working with, actually, this has been a sort of cross-team effort. In the UK, much as in the US, it's quite common to write to your local representative, to write to your member of parliament, and they're duty bound to write back to you with, a yay or a nay, but they have to correspond with you. Obviously, people are time poor. A lot of people don't want to spend time composing a letter or something. So our big project for this year was to draft sample letters on a bunch of different topics. And those include things like pushing back against CBDCs, against debanking for Bitcoiners, against the FCA miscategorization of Bitcoin, for example. So we've carefully prepared template letters for three or four different topics. And then one of our volunteers built a very easy to use app. Maybe I'll email to you after the session. And that app lets you put in your name and postcode, and it automatically finds your MP, and it will then open your mail app and let you, with 2 or 3 clicks, choose which letter you want to send, and that goes to your MP immediately. So you can literally send 4 letters in the space of a minute to your MP on these 4 different topics. Anyone in the whole country can use it, and we really want to push that up as much as we can over the next few months because, as I mentioned earlier, we're going to the conference, Labour Party conference. But yeah, we wanted to make it as easy as possible for people to really let MPs know how many of us there are.
Is the app the project that you were talking about before?
No, that's that's something else actually. That's outside BPUK. But I'm happy to move on to that now if you want to chat about that.
Oh yeah, let's jump into that.
Yeah, yeah. So I'm sorry I had to be so cloak and dagger about that, and I think this interview is going to go out after what we've been working on is public. So you may have seen I announced a short while ago I resigned from my previous job and I was going to take up a position with Coin Corner. Now, as it happens, during my transition discussions, it turned out that Coin Corner were working on a completely new project and they wanted me to head that up. So once I'd heard what it was, I was pretty excited to do so. It's a new company that we're hoping to list on the Aquis Stock Exchange in London. The company's called BHODL, BHODL, obviously, but I don't need to tell Bitcoiners that. And the idea is that we're launching as both a Bitcoin treasury and a Bitcoin services company at the same time. So the key business model for us is we want to raise as much money as we can to acquire as much Bitcoin as possible, but then to use that immediately in building out the Lightning Network. So a Bitcoin treasury company with a bit of a twist, I suppose. The team we put together, we're bringing in some of the guys from Coin Corner who've been working on Lightning pretty much since the Lightning white paper came out. They've got a 5-year-old node that we're going to have access to immediately on day one. And it's one of the top ranked nodes on the planet. It's in the top 100 out of 14,000. And so we've got a very simple business model. It's raise cash, buy Bitcoin, and then use that immediately in building out our node network. We want to be both a significant treasury player and also a significant player in the Lightning Network as well. And we, on our model, we believe will easily generate sufficient revenue effectively to be profitable given our relatively low running costs. And yeah, so I had been watching treasury companies from the sidelines for a while. This one was exciting to me because of the nature of the team we've got on board, and I'm happy to go through the guys that we've got on the team as well, if that's helpful. And also the focus on Paytech and Lightning, because I think this is an enormous total addressable market. And to the extent that the Lightning Network can steal even a bit of the volume that's going across Western Union or across the Visa and MasterCard schemes or through SWIFT, there's a huge amount of growth potential there, and I want to be part of that.
I love that. That sounds like a great idea. Like I think the Lightning Network is still very underexplored, for a better word, but it is something where this is a lot of potential, and especially now with low fees on the on-chain, obviously most people just tend to go on-chain, but this will change. Like fees will come up a lot, probably in the hundreds of dollars. Maybe at some point thousands of dollars, depending on what the dollar value and everything is. But the fees will be expenses, and as Bob Burnett puts it, we're rolling now on-chain in a Rolls Royce, and it is expensive to roll in there, and you should not expect to buy small things in a Rolls Royce. Like I spend and earn Bitcoin on a weekly basis now, and I do almost everything on chain. I think this will change within the next year. I think like in 1-2 years, I will do most of it actually on Lightning or along some layer 2, because the on-chain fees will just go up naturally over time. Maybe not next year, maybe in 2 years, whatever the time frame is. Like it's hard to predict the timing of it. And then it's like, yeah, we need to build out the Lightning infrastructure. We need to build out the layer 2s, layer 3s, and all the ecosystem around it. So I love that idea, because it's not just a treasury play. It's also the medium of exchange play. So it's the store of value and the medium of exchange kind of married in a company. Interesting.
Exactly, and we've been making that point to investors that we've been speaking with. Obviously as Bitcoin monetizes, it began, as most monies do, as a store of value, something a collectible, and I think Satoshi himself called it a collectible originally. And then once lots of people have got that collectible, you're then in a position where it can begin to be used as a medium of exchange. And I think we're at a really interesting point in Bitcoin's history where the store of value narrative is almost taken as read now. Nowadays, if you stand up and say, "Oh, Bitcoin is volatile, you're going to lose all your money," you look like a fucking idiot, because it's a $2 trillion asset. Actually, slight segue. I saw a really interesting graph of the biggest value destruction episodes in history, and I think the biggest was Enron, and that's still only in the billions. So to suggest that a 2 trillion asset is going to suddenly disappear and go to zero, you're a fucking moron. I'm sorry, there's no other way of describing you now. So, but the Lightning Network is just a baby still. And it's really interesting to hear you say, actually, that you use on-chain, because I almost never use on-chain. I'm always Lightning or eCash. But those offer like small payments that I tend to make. So if we can scale a Lightning Network to be able to handle, intercompany balance transfers and things like that, so that without thinking, you can send tens, hundreds of millions to settle a very large transaction, that will be exciting.
So what I do is I do for all my business transactions, which means paying freelancers that accept Bitcoin, or the sponsorships and partnerships that I do, that's all paid in Bitcoin. Literally every one of my sponsors now, I completely changed them over to Bitcoin payments. Like I don't get any fiat from any companies that I interact with outside of YouTube and things where like my leverage is not as good. So I still have some fiat income right now, but like most of it is already in Bitcoin. And when it's in the high hundreds, or maybe even in the few thousands, you pay 50 cents or maybe €1 in on-chain fees, maybe €1.50. Oh yeah, I do that every single time, because then I have it on-chain, I have it in my self-custody wallet, and I have it in my savings device. If I pay, and there's a Vienna meetup happening once a month, and it's usually in the same restaurant where you can pay with Bitcoin, the owner is a Bitcoiner, there I pay always with Lightning, because I don't pay $1,000 for this burger. I pay like $10, like $15 for this burger, and then I do it with Lightning, because if you have a $15 transaction and you have a $1 or $2 transaction fee, that's a lot. But
Mm.
if you get like $2,000 or $3,000 in income from a different country, maybe even, and you pay like a 70 cents or $1 fee, that's okay. That's nothing. I paid my editor Pablo. He sometimes gets it in Bitcoin, sometimes in dollars. And when we do it in dollars, it costs me like $10-15 and him like $10-15 because he's in Colombia and I'm in Austria. So that's super inconvenient. If you do it in Bitcoin, it's just 70 cents. So like for me, Bitcoin is already so much cheaper. But when it comes slower, and I think those thresholds will come down. That was my point from earlier. Is like if the transaction fee all of a sudden is like $100, I don't transact $1,000 on Bitcoin, the main chain. But if I have $100,000 and want to transact it, and the transaction fee is $100, then it makes sense again. So this is like the average transaction on Bitcoin that on chain will just go up over time, and also the one on Lightning. I think that's just a natural progression, and I think we have to prepare for that future.
Exactly, and that's really what we want to do. And actually, if you track back to that famous post by Hal Finney about Bitcoin banks, he was imagining exactly this future. He's got a great quote in there that in the future, Bitcoin transactions will be as rare as Bitcoin transactions are today in 2010. And he was imagining a scenario where you have very big final settlement done on chain. But in his example, he imagined Bitcoin banks, which would issue their own eCash backed by Bitcoin. And so you would have fast transaction speed and then slow settlement speed in a similar manner to what we have today with the way that the current banking system works. And again, that's what we've been using in our discussions with publicly at the moment on with investors on BHODL. The main chain as the settlement layer, and then Lightning, and those other protocols that will interact with Lightning, like Arc or like the Cashew protocol. Those are the payment and the transaction layers. And yes, as you say, we're preparing for a future when on-chain fees are enormous, but we still need to transact at the speed of light.
And when you say the things will be redistributed to Lightning, meaning the company will actually develop Lightning companies, or like will take a stake in Lightning companies, or like how does this work?
That's a good question. I can't answer that completely yet because some of that is down to plans that we have in the pipeline. So day one, we want to grow into becoming a significant treasury company and a significant node operator. And like I said, we're gonna leverage the expertise from the team. So we have Zach Lakin and Danny Scott joining us from Coin Corner. They will be heading up as CTO and our Chief Bitcoin Officer. We've also got the ex-CFO of PayPal is joining us as our chairman. So David Jacks, he's got fantastic experience in the paytech industry. Previously, he was at Silicon Valley Bank as well. We have Alan Farrington joining the board as well. His fund Axiom will be taking position in BHODL also. So we've got a really interesting bench of people with experience in Bitcoin and Lightning in running Bitcoin businesses. To your specific question, firstly, we want to become a significant Lightning node operator, as well as a significant holder of Bitcoin. And then after that, everything's on the table. We have a couple of ideas already in the business plan for how we want to grow and develop other lines of revenue generation. And then it's a good question. Looking to either acquire Lightning expertise or personnel who have that expertise is definitely something that we would consider. Sorry, there was a bit of a roundabout answer. I can't give you a completely straight answer at the moment.
Oh yeah, like no worries, especially the project. You noticed that before. It's like we're recording pre-launch and publishing post-launch, so like it's obviously like the project is really new, and I think I really appreciate that that you bring that on the podcast so early on. I think that this is really cool to have like the insights even like right at the starting of the company, and I think it's fully understandable that like not everything is like fully there already.
Yeah,
Like that's
thank you.
that's very normal and understandable as I did with the podcast. And I don't know if you've noticed that I've co-founded Microseed a couple of months ago, where
Yes, I
we have
saw.
we have the
Congratulations.
self custody thing, and I have now a great appreciation that you launch things, and even if they are launched, they're not fully out. Like you have still a lot of things in the mix, and that's just like a metal backup, a treasury company, and Lightning. That's a whole different game. So I appreciate that.
Thank you. Yeah, there's always some stuff you can't say because it may be, trade secrets or something you're working on in private. And then with going public, there's the additional complication that everything you say could be market sensitive information. Obviously, because it's a public company, we take our corporate responsibilities very seriously. I'm a lawyer by training, so I'm very keen on full compliance with all of the obligations that a listed company has. And again, if people aren't familiar with this, there are much higher standards of disclosure, transparency, behavior of directors, how inside information is treated, and so on. And the basic principle is that everyone in the market should get information about the company at the same time. So you can't, call a friend and warn him about your financial results and tell him to sell the stock, for example. That's very obviously insider trading, and that's not just a civil offense; it's also a criminal offense as well. So, if you are the director of a listed company, you need to take these things very, very seriously.
Yeah, it is something which is just a whole different ball game. If you are publicly traded a company and a representative there, especially if you are, like I think probably doesn't even matter which representative you are, as long as you're a representative, you have all the same responsibilities, which is interesting. Because this is the like sometimes Bitcoin make this mistake of saying, hey, there's this Bitcoin system and everything else is fiat. And I do think there's a value in having a public traded market where you can invest in companies that are just public and you don't have to be part of like a private round or anything like that. So I do like that part. And I say that because a lot of people say like, oh, there's treasury companies and this public going, like that's all like fiat. Like, why are we playing those fiat games? But I do think it's like, even in the Bitcoin world, I do think there is probably something like a public market. It might look different, and being part of the public market is just like a different game because you have different rules in there. How do you actually look at maybe the future role of treasury companies and in a Bitcoin world with the new hurdle rate?
I tend to take quite a high level view of them. And by that, I mean that at some point, I think it's likely most companies will hold Bitcoin on their balance sheet as a reserve asset. And that's for the reason that we were discussing earlier, the fact that, fiat is melting. And that was what first pushed Michael Saylor over the line, that he was holding this melting ice cube of cash on his balance sheet and he didn't know what to do with it. So I think over the long, long term, we'll see more and more companies adopting the strategy. And I also think on that narrative, we're at an interesting point in treasury company development in that a lot of different treasury companies are doing different things now. So Liquid is in Canada is doing something similar to what BHODL will do in the UK. They are looking to run and maintain Lightning nodes. SWC, obviously their core business is web development. Strategies core business in theory is still software development, although I don't know how much of that they still do. Metaplanet, it would be really funny if Metaplanet now actually went and bought more hotels, given that they have the one. But I'm aware of some other businesses coming to market in the UK, which again I can't disclose publicly, but I know that they have different core business models, but they're operating a treasury strategy as well. So I think that the short answer is that fundamentally you need to step back and question why, if people are saying the system is fiat, obviously they're right in one sense, but the second question is, why do companies go public at all? Why do you have a share capital, and why do you have equity capital markets at all? And the answer to that's probably I'd split into two. Why do you have a company? Company's a really interesting legal creation. Ultimately, not to blow my own trumpet, but a British invention.
Thank you for watching this video. This was only a snippet of the podcast. And if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.